Okay, what's good everyone? Today I've got another weekly trade review. I'm sorry this video is being recorded late. It's being recorded on Monday again. Unfortunately, next door has been having hella work done. They're getting some sort of extension, and if I was to record, you would hear that a lot louder than me because my mic picks everything up. So I'm gonna jump into it. It's only a short one, only took one trade this week and you're looking at it right now. I jump into it, I'll explain why I took it, why I took only one trade this week. And yeah, I'll give you a little update on some of the stuff I've got cooking. So yeah, let's get into it. Okay, so as you would have saw, that trade I took was on EU. So I'm going to show you DXY first, as I will always recommend if you're trading any majors or any pair that aligns with DXY, kind of gold being the one exception, you need DXY to align. So let's start here. DXY has been moving lower for a while now, pretty much the whole of the year. Since Trump got into office, we've kind of been pulling back from this massive bullish move leading up and going through the election period, right? So we had this new daily break of structure here, which we anticipated from up here. So as you can see, obviously it wasn't as bullish and direct as we would have liked, as something like maybe this one was, or this one even here. When we filled this fair value gap, we had 2 days, maybe only just one, which you could have caught, but it was a much slower burner, just as it was on the way up. So it is a little bit difficult to trade this, obviously, because let's just say you could have took a trade here, or maybe even not, because you kind of wanted us to trade out. But let's say you did, this probably could have won, that you maybe could have got the trade here. I don't know if you could have fit something here. Here you would have lost. You could have won. You could have won. You could have won. You would have lost. Could have won. I don't know. You would have lost here. Obviously, this is just daily, by the way. You're using other context from the 4 hour, 1 hour, even 30 minute, 15, whatever you use. But as you can see, and especially around here, we consolidate quite a bit. It's much more difficult to trade. So I've had this old weekly low marked out for ages. If I go onto the weekly, I'll show you this time. I remember last week I didn't. As you can see, it was just this low down here. It wasn't anything too major, but when we was displacing lower through here, I was thinking what could stop price, and this is a low before we had a big impulse move up, so it is relatively important. We swept this low on the daily, we went below it twice, respecting it both times, and then was moving higher. Again here, we had another massive move down, which we rejected. So I'm looking into today, I'm seeing this daily fair value gap, and I'm thinking, okay, we could be moving higher here. Drop down to the 4 hour, you can see we had this 4 hour fair value gap. This candle we don't actually need, so I'll remove that one. And you could see we respected it coming into the 3 AM session. And yes, we respected it, so I'm looking at this thinking, okay, we could go higher. We also, on the 1 hour, swept Asian loads, so I'm thinking, okay, also tapping into this 1 hour fair value gap. This could be really good for us to move higher, take these lows, grab some liquidity before potentially, or setting us up with a pullback before the continuation to take these lows, as market structure wise we are bearish. So looking at that, I dropped over to something like EU, and I see EU has been bullish since the turn of the year. We had this market structure shift in March. Since then we've been moving higher. We haven't had a sufficient pullback at all until last month. We've then now made this break of structure, but price was struggling here. As you can see, there's clearly a lack of bullish intent. I mean, if you compare it to these last 2 candles at least, which made the break of structure, there's a clear difference. Obviously that does align with euro getting stuck. I'm not sure if there's anything here on the weekly. I don't believe there is. Obviously there is this high, but it's not a swing and it's pretty old, so nothing too much of concern for me. If we go down to the 4 hour, you can see we're respecting this 4 hour fair value gap really nicely with this Asian candle and this London candle. It's respecting this 4 hour fair value gap nicely, so I'm thinking, okay, this could again set us up to continue to the downside. If we drop down to the 1 hour, you can see again we swept Asian highs, which is a really nice point of liquidity if you're trading this London session, because it can really set up a move for the rest of the day. So again, we came into this order block here. Obviously the ideal one would probably be this candle right here. However, it's just something extra if you really use them, something to stack on top. So Okay, so dropping down onto the 5-minute chart, you can see we traded a little bit above Asia for maybe 10 minutes or so, and then we came back into the zone aggressively. I'm looking at this thinking, okay, this is a really nice place to potentially sell from. Obviously, we've got the 4-hour fair value gap, if I believe, yep. And we swept Asia. It's also a 1-hour swing high. So, again, it's a nice point of liquidity. We're aggressively coming back into the zone. I dropped down to the 1 minute so you can see the shifts. We had this market structure shift here just before the session. I was looking at this and thinking, oh, there's a potential entry here. However, it's before. You have to follow your rules, right? Obviously, there is chances where that would have won. That if I did take it here, the trade wouldn't have won anyway. But it's always key to do that, because when you fall back and when you're subconsciously talking to yourself about, oh, it's just a little rule break, if you have as little experience of making those little rule breaks as possible, the harder it is to actually do it. Like, let's say you're always kind of trading 5-10 minutes before, that would have been an easy position for me to take. However, then I'm not trading London, if you get what I mean. I'm not trading from 3 a.m, therefore that trade is not valid, right? Or if I take a trade at 5:10, again, it's the exact same thing. If I did that often, I would think, oh, there's nothing of it. Because I don't do that, I don't do it. There's times you could get in here, it will manipulate, because this is pre-London. As you can see here, this was a time we did manipulate and we swept Asia before moving lower. Obviously, I couldn't fit a position here. Potentially, if I was moving a tighter stop, like if I had my stop above this 1 minute high instead, obviously we would have won. But again, that's just how trading goes sometimes. This gets stopped out quite a lot. That's the reason I don't do it. So yeah. Anyway, so I took the position. We had this break right here. We moved very aggressively lower. So I said, okay, I don't want to enter there because my TP would have been below this. I didn't really want that, or it would have been too close. I didn't like how much we moved lower that quick. So I wanted us to, well, I liked it, but I didn't like to enter off it. So I wanted us to pull back a little bit. We did. I got in. Price moved lower nicely initially, but we then pulled back. And then if I press play and replay this, you can see what happened. So this white line here represents this. We had, as you can see here, retail sales at 8:30. So I closed 10 minutes before at 8:20. And you can see that did end up stopping us from taking a loss, which probably would have took me out here. So it would have been like 1.5 R instead of 1, or 0.66, which this trade ended up being. We did then, however, move lower. If you see here, price moved lower, and then we continued to the downside very aggressively. This is something which, again, we have been noticing is it does keep propping up. However, this one I definitely think is more acceptable because we didn't leave any liquidity up here. We swept it, we moved aggressively down, coming out of a 4-hour zone. Obviously, I mentioned this being the ideal older block, but we did go into that. But again, with trading, it's not ideal. It happens. Obviously, I could have put stops above here, but even then, it still would have stopped me out unless I chose like 3 pips above. Why would I ever do that, right? So that just happened. I also would have closed for news anyway, so it wouldn't have made any difference. I'm also looking at entries kind of similar to this. This one isn't ideal as we kind of have made another leg since going into the 4-hour fair value gap, but I'm looking at potential inversion 5 minutes coming out of good places to buy, such as sweeping Asian highs or a 4-hour fair value gap. If I did take this, obviously entry was a little tiny bit lower, literally the same position, and it would have lost anyway, but it's still useful to kind of, I log this anyway as I'm getting data on what is the ideal A+ setup for this entry model, keeping all my other analysis the same. There's no issue with my high time frame at all. I just think using these 1 minute market structure shifts can definitely limit me at times. So that's a little sneak peek of that. When that's done, I'll make a whole video of that. So yeah, so going into 1 trade a week, or 1 trade this week, obviously I kind of normally take 2 or 3, but there wasn't much presenting itself. Also, I don't like fundamentals, but the truth is when there is stuff like the tensions going on in the Middle East, etc., it definitely can affect market volatility as people are going into safe havens. So there's just less volume going around, right? People buying into gold. I don't know what else, but people buying into gold, stuff like that, and that can remove and reduce the volume from here as people aren't trading it as much. So it could be less than ideal situations. Nothing else really appeared to me. We can go over DXY, I guess, on the higher time frame and see what it was doing, as I don't really remember off the top of my head. So yeah, we closed through it, and we did end up moving back into the zone here. Again, not really that tradable, to be honest. Maybe on the 4 hour there's something more, but just not too tradable. Didn't really take anything, not come into any good places to buy or sell. Friday I was looking for us to fill this gap we had right here, but I didn't get any sort of position to do so. We didn't come from anywhere to buy, so didn't sweep any lick, didn't come into this daily fair value gap. Just not too much there for me, to be honest. It wasn't great price action, so I don't need to trade every day. We're trying to trade quality, we're not trying to trade frequency, so it didn't appear. I'm not going to take it. Obviously, if I did, let's say I took all these days, I could have been easily, it could have been a -4% week, which can happen, but if it hasn't happened by my rules, I'm not happy it's happened. Do you get what I mean? So, because you have to think, every time you take a trade, you're not trying to force anything, because you can't force winning, really. In trading, you can't. In other things, obviously, you can kick that door down, but forcing setups in trading just doesn't work. The market's very unforgiving. It doesn't care about your position. It's neutrally charged. It moves wherever it's going to move. So you being emotional about having money for it to go that way, if it doesn't line up on something that is backed by data and by you have confidence in, there's no point. Stay disciplined. Make sure you're following your rules, which again need to be backed by data. That's what you back test for, or forward test, and then from there you don't need to keep back testing for hundreds and hundreds of hours, to be honest. Once you get a good idea and have a decent sample size over a course of different parts of a year, or maybe over 2 years, you're chilling. Just hop in the markets and see how it goes. It's more psychological than anything. So yeah, just stay disciplined, work hard, and you've got it. Another thing I kind of want to mention on is going into, so obviously this was a losing week, and I believe last week was as well. I don't really remember, which you can probably kind of tell where I'm going with this. It doesn't matter, because realistically, I think it was 1% this week, or 0.5%, 0.6% this week, 1% last week maybe, or 2, I don't even remember. But if I win a trade, I'm back up. Like, I don't really even, you kind of do think about it that way, but you're not really thinking about it because you have really good periods, right? Trading is kind of, I look at it very similar to fighting, as in, like, if you're in the UFC or you're a boxer, obviously they have sponsorship deals. That can be other sources of income, whether someone's a mentor, whether you've got another business or anything like that. But you get big payouts at certain periods. So if you've got a fight, you might be getting 90, 100, $500,000, whatever you get paid, right? Obviously at the top level. But between that, obviously you're getting your sponsorship money, but I would imagine it's not too comparable unless you're John Jones or someone like that. Do you know what I mean? And also quite similar to streaming, where it can be very volatile each month. So that's the same with trading. But that's why I would assume if you're getting into trading, you're going to be quite financially literate. So you're going to understand how to, if you get that money, to use that until you get the other amount of money. Obviously, the ideal thing is you're getting consistent payouts month on month. However, that doesn't always happen. You're going to have a break-even month every now and then. You're probably even going to have a losing month every now and then. But if you look at it as, oh no, what's going to happen? Then that losing month will compound, and you're going to have 2 losing months, 3 losing months. You've blown accounts, and you're not back to square one, potentially even behind if your mental is messed up. But back to square one is in terms of capital, right? And that's king in trading. So it's important not to really look at that. I took the wins and losses, like percentage and stuff like that, completely off my trading, and where I log it, it's now at the back of my like journal type chart thing, so, or the table, so I can't even see it because there's I don't remember the trader's name, but he's one of the top traders, and he couldn't even tell you how much he's made in the year. And that's realistically, that's ideal, because he's making money, but he's not focused on the outcome, because trading is a process. If you're taking good trades over and over again, then the results are going to happen. Okay, I've just realized I've been talking for 10 minutes. Yeah, as I say, like every week, these videos have no script, they have no structure. I just get the trade, hop on the charts and speak. So yeah, I hope there's some sort of insight you could find from this. I'll speak to you next week.